I was looking at the chart last night, and I got to thinking, I've been talking about, one of the skills that new traders need to develop is patience and discipline. And how can you do that? So, if you've watched any of my previous videos, you've seen that my favorite commodity is 30-year bonds, which is the symbol ZB. And so anyway, I was looking at this chart, and it's kind of been dancing around on this major support level for the last few days, and it really plays on your mind. Tests your ability to be patient, and that's one of the skills that I've been working on pretty hard last year. And I thought, I need to make a video, kind of walk you guys through the process, and show you some of the methods that I use to kind of quiet your mind, remove some of that fear of missing out, and concentrate on learning to be patient, because like I said before, that really is the secret sauce. You put a lot of work into developing your trading strategy, or you may have gotten a little insight or a little education from somebody. You may have picked up on a strategy you think that you can use, on a YouTube video by one of the many trading gurus out there. YouTube is a wealth of information, but you can find yourself going down a rabbit hole for sure. So I think what I would do, just to get off topic here for a second, if you're looking for a trading strategy to develop, or just looking for a trading strategy in the very beginning, what I would do is learn a concept called support and resistance. How to identify support and resistance, and you want to do it on a higher time frame, on a weekly chart or a daily chart. I primarily focus on a daily chart, and then we'll find or we'll identify major support and resistance levels on a weekly chart. When you look at a weekly chart, it really gives you an overall clearer picture of what's going on. And then if you trade off of a daily chart, you're looking for entries based on those support levels on a weekly chart. And that's really, I would master that first. That's really the fundamentals of learning how to trade, in my opinion, anyway. It's no different than any undertaking that you begin in life, whether it's starting a new job, going to college, learning a new skill. It starts with the fundamentals. Think about the path through college. In the early years, you're taking general education classes, learning how to become a professional student, on top of your experiences in high school, which depending on what high school, what school system you're in, may have prepared you very well to enter college, or may not have. But you're learning the fundamentals of how to be a student. You start a new job, and if it's a field you've never worked in before, you're going to receive some training, uh, which are fundamentals. What are the hazards? What tools are you using? What are you trying to accomplish? What's the end goal for your contribution at work? What are they paying you for? Paying you to perform a service for them. Therefore, in order to do it well, you have to understand what the vision is for the company. What is my role here? And that's just one way to look at fundamentals. And if you apply that to trading, when you're starting out, I think a lot of people, me included at the time, when I first got interested in trading, what was the main focus? Well, the main focus was to make money. Why wouldn't it be? Here's an avenue that I can pursue, that you can pursue, and if you believe all of the hype or buy into all of the hype that's all around you, you can make a ton of money, um, sometimes overnight, depending on who you listen to, in trading. And it's very true. You can make a lot of money in trading. I've made what I would consider, a decent amount of money. Once I became consistent in my approach. But it starts with the fundamentals. And if you spend time in the beginning focusing on that before your pursuit to financial riches, you'll be much better off. And one thing I think you should concentrate on is learning to identify important levels and price levels in whatever commodity or stock you know you're looking at. And that's another thing I would recommend. Don't be all over the board, trying to catch, a move in the most recent winner or loser. If you're looking for, a bounce, um, the biggest loser or biggest winner of the day or the week, you know, um, pick a commodity or two, pick a stock or two or three, and focus on those and learn how that particular one moves. And I made an ebook. I give it away for free. Kind of explains the process. If you check the link in the description of the video, it's in there. Uh, log into my website. I kind of put it together to do a deep dive and explain how the market moves, in an attempt to show you, how to identify these levels. And it's free, so check it out. All you'll have to do is enter your email address, so the site knows where to send it, and it's immediate, be in your inbox, free of charge, no problem. My little contribution to help save you some time in your learning pursuit of this wonderful world of trading, and it is a wonderful world. I I grew up in a blue collar family. Learned at a very young age the meaning of hard work, the value of a dollar, and um, you know, so I put this together several months ago. I was thinking, how can I help folks get off on the right start while learning how to trade? And so I put that together. I think you'll enjoy it. It's pretty comprehensive. Um, if you grab it, you know, shoot me a comment in the on the video. I'd love to hear if you got any value out of it, or you know, if you want to talk about you know, what you may be struggling with while you're learning how to trade. Be happy to help. I think everyone needs a mentor or a teacher, and you know, I'm not a expert by any means, but I think I've got a pretty solid idea on what it takes to trade the markets and make repeatable income, you know, most importantly while holding down a full-time job, which I'm sure most of you are in a similar situation. So, not to digress, let's get back on topic. But anyway, getting back to the concept of patience and discipline. So I was looking at the chart last night, and if you watch the previous two videos, you'll see that, you know, I've been talking about how ZB, you know, it's kind of hanging around at a major support level, 112ish issue, or the 112 level. ZB, for those of you just tuning in, that's a 30-year bond commodities future, and one of my favorites, bread and butter, if you will. I think that you know, if you've heard of the S&P 500, and you know how many people, you know, trade it, how popular of an index that it is. You know, it moves fairly predictably. However, it's very subjective to news, which, as you can very well imagine, you know, major world events should affect an index like the S&P 500. You know, it's a collection of, you know, 500 of the largest publicly traded organizations in the world. So why wouldn't world news affect it? But anyway, it's very predictable, especially when you look at it on a higher time frame. You know. And the reason why I bring it up is because ZB reacts very similarly to the S&P 500 in the way that it moves. Not that you could say when the S&P 500 goes up and down, bonds are going up and down. That's not what I'm saying. What I'm saying is that the way that it moves on the chart from day to day, week to week, is very similar. It's predictable. And when you look at a weekly chart, and if you spent any time, you know, understanding candlesticks, you know, I think two of the most important candlesticks on a weekly chart are, you know, what we call the shooting star, which is an up thrust candle, and the hammer, which is a down thrust candle. And depending on where you see them on the chart, they can be very powerful. You know, you typically are looking for the shooting star candle at the top of an uptrend, and it really signifies that at that level the market is weak. And on a weekly chart, you typically only see one or the other. You know, shooting star at the top, hammer at the bottom. Hammer at the bottom, you know, is the definition is in the description of the candle. You know, the price action is hammering out a base. And on the weekly chart, what you'll typically see is it's hammering out a new important support level, or it's hammering out a new base at a level that was previously an important step level or support level in the past. So on a weekly chart, it's a real clear picture, and I'll use that to kind of gauge where things are at, and kind of unpack some of the noise that you see on a daily chart. And when I talk about noise, man, does the volume go up as the time frame goes down? You know, 4 hour chart, not so bad. You get into an hour or a 30 minute or a 15 minute or a 5 minute chart, man, you got to be glued to your screen. You're trying to catch, fast moves. They're not large moves, but they're fast moves. And as you go down in time frame, the frequency of your trading has to increase in comparison to trades made on a daily chart, because of the size of the move is so much smaller. And then, you know, what happens then? As you increase your trading frequency, you also increase your potential frequency of suffering losses. So that's why I really recommend in the beginning, as you're learning how to trade, you're working on mastering, or at least becoming very familiar with the foundations, of how you need to trade, based on your lifestyle. And what I mean is, if you got a full-time job, who needs or wants the stress of having to try to keep tabs on the market throughout the day, while you're at work? Um, that's just a recipe for disaster, I think. So anyway, on a weekly chart, those major support levels will become much more clear, and then as you're viewing your commodity on a daily chart, it helps put some context or some clarity into what's going on. And then you could do something as simple as after you've identified these levels on a weekly chart, switch it to a daily chart. Those levels will still show on the daily time frame chart, and then you can watch the price action. And when it comes into that level, let's say it's trending down into a major support level, there's a very high probability it's gonna respect that level, and it's gonna bounce off of it and go higher. And if you uh, utilize some of the information, brief information I gave you on candlesticks, shooting star and a hammer, among others, as you learn about them, you can use those similar candles on a daily chart and time your entries. So, one thing to keep in mind with what is this guy doing? One thing to keep in mind when you're identifying support levels is it's not a brick wall. I mean, it's not a hard boundary. It's you got to give it a little bit of room. You got to look at it more as a rubber band than a block wall. Um, and I I concentrate on, you know, I don't validate a bar until after that bar is closed. So on a daily time frame, that would mean that 4 o'clock Central, the financial market is closed. That daily bar settle, and then we've got the open, the high, the low, and the close of that day's session on the bar. And the same would hold true if you're looking at a weekly time frame. That weekly bar is not final until the market closes on Friday. Um, if you're looking at an hourly chart, it's when the hour's up. 4 hour charts on that 4 hour block's up. Don't use a bar that's in play, as a data point, because it's still fluid. So getting back to what I was saying, you've got these major support and resistance levels on your daily chart that you plotted out on your weekly chart, and and then as you see the price action go into that zone, you can look for one of those candlestick setups that I was talking about, or others, as you learn about them, um, and time your entries. And if you look at what's been going on in ZB, uh, it topped out on a weekly chart with a shooting star at the end of June. It was like the going into the I think it was the third week of June. That's about right. 'Cause it was about 3 weeks ago. Um, and the week closed out with a very nice shooting star candle, an up thrust candle at the top of an uptrend that had been going on for about 2 months, and then has predictably fallen off over the last 3 weeks, by about 3 points, which is 96 ticks, 96 times 31.25, which is the value of each tick in ZB. That's about $3,000. Yeah, yeah, that's about $3,000. And had you entered a trade 3 weeks ago, the contract month had already rolled over. So you had plenty of time. You would, on one contract, you would be, if you closed it out this morning, you would be roughly $3,000 richer, or have $3,000 more in your account, which is, almost the margin for a second contract. And that's one of the benefits, when trading, when there's not a lot of volatility in the market, so the market's, moving slower, and it typically happens in areas where insiders are either accumulating inventory or distributing inventory. Accumulating means that they're buying for a future engineered price increase. That's typically how it works. Those with the money decide what happens, and big institutional trading accounts, have the ability to do that, and they typically are, they're working in concert with each other. I don't think, they may know it, they may not know it, but it's just the sheer mass of their capital at work is what moves things around, and they can't really do it uh, secretly. They leave footprints, and that's where the power of patience will make you a lot of money. If you learn to wait for these major support levels, which are these turnaround points for these, you know, for insiders. All you really should be looking to do is riding on their coattails. You know, take a piece of the pie when it's available to you, and rinse and repeat. You know, and as you get better, as you become more experienced over time, certainly you can go down into the lower time frames and trade more frequently if you know that's what makes you smile. Um, and yeah, you know, whatever you want to do. But please start off learning how to trade. You know, don't give all your don't give all your money to a more seasoned trader that, you know, spent time learning the fundamentals, because that's what you're going to do. Now, you know, you may get lucky in the beginning. You may win a trade or two, three. You know, enter your trading uh, education period on the back of a series of wins, and that's great. But I will guarantee you're going to get pumped up with a misplaced uh, sense of confidence that it's just that easy, and you're going to give it all to somebody else. Guarantee you, it'll happen. How do I know it'll happen? Because it happened to this guy. Uh, so, you know, slow down, be patient, sit on your hands, and learn, and you will be in such a better place, um, to make money trading than probably 99% of the people that are in your shoes. So, hey, another fine drive to work, another fine conversation with you all. You know, just unpacking some thoughts that I think are of value to everyone. And I'm arriving at work, so have a great day. Um, you know, take the time to learn. It's a free education. Use it to your benefit. And anyway, I'm rambling. I'll see you on the next clip. Have a good day. Bye.